Hey traders, it's Chris here. Welcome to our monthly webinar, first Friday of the month. Hope you are well. All right, so we are live. Welcome to, every first Friday of every month, we do a webinar live on YouTube. It's an all-member webinar where we answer questions from all our members. So you kind of get to see an idea of how we trade and how we teach our members to trade. We do weekly webinars for our members every single Friday. And first Friday of the month, we kind of open the kimono and do one publicly live on YouTube. So you all get to participate in this and the community gets come together, members and non-members. So, okay, cool. Looks like more is joining. Cool. Fantastic. So we are going to be starting off with some questions. And then I do want to do some recap, kind of what's going on in the markets right now. So markets are tanking. And this is actually playing out really well because early in September, in fact, let me check when. I bought some VIX protection. So VIX is the fear index or volatility index. And generally when markets are tanking, the VIX will soar. So this is VIX right now. And so it just launched this week. And so I bought some VIX protection, I'll say like 1 or 2 weeks ago. And partially because the options were super cheap, and generally that's the best time to be buying insurance against market sell-off is before everybody knows there's a fire. That's before there is going to be a fire. If you have some sort of carnal knowledge that's, hey, there's going to be a fire coming or something like that, now is a good time to be buying insurance. And that's what we did. We bought a VIX protection. So we did a bull put spread. So I bought a bull put spread on VIX. It was a 27.32.5. So basically when the market was doing this, though, when implied volatility is low, that's the best time to be buying options because options are cheap. So think about it like we just had a bunch of fires in California. If you had bought fire insurance 2 weeks before the fires, then, or a week before, that would have been like the best time to be buying fire insurance. But if you tried to buy fire insurance for your homes now, it's going to either be super expensive or you can't even get it. And that's kind of how the VIX works, which is that it's super cheap while there's like nothing major happening. And so we bought on this week because implied volatility was super low. It was super cheap to buy on. So when you buy a bull put spread, basically what you're doing is you're buying a lower call, and then you're selling an upper call. So it caps your profits, but it also, by selling the upper call, you reduce the cost of the call that you're buying, basically. So you buy one call, that costs money. You got to pay the premium on that. You sell the higher call, that reduces your premium. I think I paid, what was it, about $1.95 per option contract. So for those of you who don't know options, whatever the price is, like $1.95, $1.50, each option contract is represented by 100 shares. So you got to multiply it times 100, basically. So I paid $1.95 per option contract, and I did 10 option contracts, so $19.50. And that thing is in the money now, and it's in the money quite a lot because I bought the 29 or 27, and I sold the 32.5. So it hasn't hit the full profit target yet, even though it's hit the strikes. Part of that is because time decay, and part of that is because gamma hasn't fully shifted. But yeah, I'm making a lot of money on this one right now. So it was a great time to buy protection. And we also did a QQQ bear call spread yesterday. In fact, we did it right. In fact, we even announced it in the trade members room. Said sold a bear call spread. It was the market. I wanted to get it right off the bat, but then it started to sell off and the spreads were widening and changing really fast. And so on this little pop-up, I caught it, and then the market tanked. So it was just like near perfect timing. I sold the 304 and I bought the 308. So basically what I did is I just took these all-time highs here, and I sold the 304 and I bought the 308. So instead of a debit spread, it's a credit spread. So I collected a credit. I collected money for selling that option, and I got 137 on that one there per contract. So 10 contracts, $1,370. So not bad. And that thing has just literally tanked since then. So the chances of it hitting and it's a September 18th or 16th expiry. I forget. It is the 18th expiry, 2 weeks from now. So unless QQQ closes above 304 by the 18th, which is going to be hard, I get to keep the full credit basically. So pretty nice trade on that one there. But yeah, so markets are tanking. We got a lot of people coming in. Hi, Chris. Hello to you, Kaja. Babu, hello to you. Rich, good to see you. Yanni, good to see you. TW Pickett, welcome. I'm not sure if this is your first time TW, but if so, welcome. So yeah, we basically didn't have a position in the underlying in QQQ, but we took a bearish position on QQQ, which is the ETF for the NASDAQ index. And that has worked out really, really well. So I feel like we're doing a pretty good job of neutralizing risk. We have covered calls on all our stock position. We have it on SPCE. We have it on DKNG. We also sold, did we sell? No, we sold a put on Tesla at 193. And ironically, if this thing keeps selling off, it might actually get there. That'd be impressive. So we sold a covered put on Tesla at 193. So basically, if Tesla gets below 193 by the time of expiry, then and the other guy who bought the option contract exercises, then we'll be long Tesla at 193, which I think is a good position to be long. So those are some of the recent moves we've been making, but markets are just absolutely getting hammered. Like, when was the last time the S&P was down 78 points in a day? I'm trying to think of this week, way back then. What was that? 31.89, and it closed at 30.26. So 160 points on the week. This is down 75 points on the day. That is absolutely brutal. This is a massive amount of selling. It's our first, if it closes where it is now, it'll be our first weekly close below the monthly VWAP in a long time. So you're talking back in late June, and it's just had consecutive closes above it. This is very bearish. If we close 75 points negative on ES or more, that's going to be brutal. And the real pressure is actually coming from the NASDAQ, because the NASDAQ was the leader. So S&P just recently eclipsed its all-time highs 2 weeks ago, but NASDAQ's been above it for weeks. And so NASDAQ was the leader. And so with NASDAQ selling off, because it was pulling the whole market up, it's going to be pulling the whole market down. It was down, I think, 5% yesterday. It's almost down 5% today. This is a brutal, brutal week for NASDAQ. This is a lot of selling. And part of it is also because people were long. There was a lot of dealers that were short gamma. Basically, they were short options. So to cover their positions and get delta neutral, they had to buy the underlying, which means that if they were short options on the NASDAQ, they'd have to buy the NASDAQ underlying outright just to neutralize their positions, because the call buying was so furious on the NASDAQ. So there's a lot of dealers that are long the underlying, and they're in a lot of trouble right now. So yeah, there's just going to be a lot of unwinding right now. If we close where we are now or worse, this is going to be bad. This is going to be very bad. So, Christopher Lee, morning to you. Okay, we got some questions, and then we're going to do member questions. So, 1 second here. Okay, that's good to go on that. I can close that. Sayub is saying, in penny stocks, does the same concepts apply as in FX, such as pivot points, Fibonacci, and our technical analysis? I don't use Fibonacci, and I don't use pivot points. Do they apply the same? I know price action and the price action models we use apply the same, but the difference is that when you trade stocks, you have to incorporate volume and VWAP. So that is something is different. Reason why I ask on betting on movement of stock as opposed to buying it, I'm guessing it's least capital to speculate on the movement. I'm not sure I understand the question. Can you help me? Can you help me can you restate that so I can understand better? That would help. More into you, Chi-Chan. Montana, he's back. So Montana, I don't do trend lines. I don't draw trend lines. There's It's like saying, hey, can you paint a curving line that bends at this and this? Like, it's too hard for me to figure that out. So yeah, if you have a specific analysis you want me to do, I can do that. But I don't really draw trend lines or anything like that. And I'm not a fan of individual trend lines anyways. Like, I don't trade individual trend lines, so there's not really much I can offer on that. It's just not my jam. I didn't drink a lot of water yesterday, so I'm feeling a little dehydrated today. So I'm trying to get in more there. Okay, so let's do some member questions. We have member questions, and then we're going to we'll do open Q&A. For members, I've gone through this like in a cursory way. If the questions are kind of inappropriate, then I'll just skip it and we'll answer it privately in the webinar. So let's run through them. Rokan G. I'm digging into the lessons. I'm seeing that most of the setups on the 1 hour and 4 hour time frames. I only trade intraday 1 minute charts, and it'd be great to see how you day trade these very low time frames like I used to do in the past. As I've understood, would you be open to doing any full day trading videos from market prep to market close? I don't trade market prep to market close. The majority of my day trading is in the first couple hours, maybe first 3 hours, but by New York lunch, I'm usually done. If you want to see how I'm trading live, then you can do that in the stock trading course. I'm sharing my live trades for the first couple hours. But regardless, the same principles apply. The same methods, patterns, structures, context, skills that I'm using on the 1 hour and 4 hour time frames is the same on the 5 minute and 1 minute. When I trade stocks on a day trading session, I'm doing 5 minute and 1 minute. So it's the exact same principles and nothing changes. So you wouldn't learn anything new. There's nothing there. But if you want to see how I am day trading, you can join the stock trading course, and I share my live trades for the first couple hours, usually from 6 till 8:30, right around a half hour before New York lunch. So I'm sharing my live trades, and I'm sharing, hey, I'm updating stop loss to this and this and that. Here's my entry. Here's my stop loss, take profit. I'm doing all that stuff, and so you can kind of learn and see how I'm doing it in real time that way. So KD, if you want me to do analysis, currency pair, time frame, you got to give like a 1 sentence description whether you're bullish or bearish. But we'll do that at the end of this because we got to run through the questions real quick. Stefan, a quick question with the improving stop loss placement. I'm trying to fine tune my ability to recognize where I can tighten my stop loss. Didn't you tighten your stop loss a little too early on a trade this week and get stopped out? And then the trade went totally to your take profit target. Yeah, I'm just curious, Stefano, why do you feel like you need to tighten your stop loss placement? Yeah, I'm just curious on that. If you're risking the same percent, is your accuracy really solid and you're profitable and you're just trying to like improve your edge a little bit, or are you not profitable? Help me out, because if you're not profitable, then you shouldn't be tightening your stop loss right now. If you are profitable and you've established an edge and it's very stable, then you want to start tightening, buttoning down the hatches, one of those being the stop loss. Could you have tightened your stop loss here? I think this is pretty good placement. You could have, if you didn't put it here, then you just put it above here. This seems a little big. Yeah, it seems a little big. I don't have all the charts, so it's hard for me to do it. And this is a 15-minute chart. You're asking me to like look at a small snapshot and say, hey, is there something about this landscape that I would have photographed differently? It's hard for me to do that. But it seems a little big. It's like $1.70 stop. That seems like a little much. Are interests considered as donations? This is a wealth building course question. Interests. I'm not sure what you mean, Yanni. Can you help me out on that one? That would be good if you're here. Master Trader 999. Hi, Sasha and Chris. In the course, sector and cap determine strategy. Sector and cap does not determine strategy. Sector and cap points us to what are more probable scenarios, but that doesn't mean it like is a fixed strategy. So each sector and cap has its own unique characteristics. So those tend to be general guidelines of how the current tends to flow with those. But I'll long or short any cap, any sector. It doesn't matter. So you trade both sides if the market and everything points to that direction. What are the recommended stock screener in terms of sector cap volumes or anything? If I only want to swing, if I want to trade swing style longer term, probably invest in stocks. I wouldn't look at anything under the 4-hour chart. I would look at 4-hour daily and weekly, and then like those are your 3 time frames. If you're going to swing trade and hold for weeks, months, maybe years, 4-hour daily and weekly. That would be your time frames. You don't need to look at anything else. That's it. Your 4-hour VWAP should be anchored to weekly, and then your weekly, your daily and weekly timeframes should be anchored to the monthly VWAP. So that's what I would do. And I would just trade with that as much as possible. Obviously with the price action context supporting that, but there's not really a whole lot of screeners. You could look for like major weekly breakouts and things like that. But the problem is that when you're looking at screeners that are not just for the day, then you really have to filter out like things that are breaking out for the week, high volume for the week, high volume for the month kind of thing. You have to really extend your screeners out basically. Stefano, me again, I notice quite often I find the value of the monthly VWAP to be different depending upon the time frame I'm sending on or that I'm set it on. First off, your 4-hour time frame should be set to the weekly VWAP. So set your 4-hour to the weekly, set your weekly chart to the monthly VWAP. That is a better way to do it. I was thinking to take life insurance. This is a wealth building course question. Any advice or thoughts? I recommend it. I have a life insurance policy. You have term, you have open-ended basically, which is like till you die. And so if you have people that you're leaving behind, kids, I don't have kids, but I have a girlfriend and I have properties, and I have like assets and things like that. And I wouldn't want to just leave her with that burden. So I have life insurance for that. Ironically, I found out something funny. My mom told me like a year or two ago, like a couple years ago, she's like, hey, I wanted to let you know about this. I didn't tell you though. But in your 20s, you were kind of going through a crazy time in your life. We didn't really know what was going on with you. And my early 20s was a crazy time for me. And so they took out a life insurance policy on me at 24 years of age because my life was going in a strange direction at the time. It's hysterical. And so, yeah, she didn't tell me till like 2 years ago, which is like literally decades later. But yeah, I think you're living, you have kids and things like that. And so, yes, I'd recommend it. Highly valuable to have those things. You can do the term, which is cheaper, or you can do open-ended. So the life insurance policies, one of the great things about life insurance policies that people don't know from like a wealth building course perspective is that there are certain life insurance policies that the equity that you build into them, you can actually take that out towards like a mortgage or something like that. So if you have, say, like 500K that you've put into a life insurance policy over like 2 decades, and it's built into that policy and the policy is for life, it's like a term life policy or something like that, you can actually take out that equity and use it for very specific things. They're usually within the contract of life insurance policy, but mortgages, I believe, is one of them. So very interesting way it's kind of like a way to get 2 times the effect out of your money. You're paying money into the life insurance, and then you get to use it for potential purchases, and things like that, which can increase your net worth. So very valuable thing. And Stefano's back again. Could you please advise on how to approach this scenario? Okay. This looks like an Italian stock. And you're on the 15-minute time frame. I mean, it looks pretty bullish. It's a corrective structure at top. Even though you have a false break, the false break does make it a little less bullish, but it's still bullish. So until this structure breaks, you have to be bullish. Yeah, you have to be bullish until this structure breaks. This low right here, once that breaks, then short-term you can be bearish. But then you have a nice RL here at $2. So, hard not to enjoy that. Okay, cool. Wow, we blew through the questions. It's awesome. Now we can get to questions on our members, and we're down 91 points. I'm loving it. I'm loving it. I'm actually loving the fact that the stock market is selling off. Even though I do have some medium-term stock positions that are losing value, we're in massive profit or in less profit or are underwater now a little bit. I'm totally loving it because one, I thought this run was ridiculous. Personally, it's just ridiculous. This bounce off the lows was, especially in the S&P, was the fastest recovery in history. And you can't say globally that makes sense. Like, it just didn't make any sense. It made absolutely no sense that the market should be recovering and making new all-time highs when millions of people are still out of a job. Main Street is still suffering. Just a lot of it didn't make a whole lot of sense. It doesn't really matter whether it makes sense or not. I'm a price action trader. I have to trade the trend. So I was buying this on the way up, but I'm glad we've had a selling candle like this, because there were certain stocks that were valued at ridiculous levels. Like, there's no way you can say that Tesla is the value of the entire auto market. That just didn't make any sense. They, out of all the companies per second in terms of revenue, they're at the absolute bottom. Like, they make like $750 or something per second or something like that, whereas Toyota is making like $9,000 per second. And so it's just, there's no way you can say that they were more valuable than like 18 car companies combined. It just didn't make any sense. Apple didn't make any sense. There were just certain things that just did not make any sense. And so now it feels like there's sort of a realignment, because there was a lot of weird things going on in the options market. There was just a lot of things going on in the market that were weird. And this kind of, sell off, if it closes deep enough, will force those kind of mispricing things to realign back to kind of a normalcy. And then they'll create really good trading opportunities. So instead of things being overpriced, they'll become like normally priced again. Okay, so Katie says bullish for your USD, but whenever you're done. Okay, so let's take a look. I'm also glad Bitcoin's coming down. I'd like to see a good dip in it, and then I'd like to get long in it, but it's not there yet. Bullish 4-hour. That's the structure I'm seeing on the euro dollar right now. And so as long as that structure holds, you play the channel. As soon as it breaks, then it's disrupted. This is a really good base of support. That's an amazing run in euro. I think I even mentioned that, like, once it was 116, 117, I'm like, yeah, this is going to 120. And it did hit 120. When did it hit 120? 3 days ago. So yeah, because you had this impulsive corrective structure building for a breakout. Nice RL trade here. If you didn't get long here, you missed a really premium trade. This is a really, really good trade on your US dollar. And wow, it just held the 20 MA for a really, really long run. That's really impressive. That's really impressive. 14 to 17. That's an impressive run. You got a wide corrective structure at the top. So again, if we're inside this structure, then you have to be bullish, but there's parts of this, there's little hints inside that it is kind of rolling over a little bit. But again, until the structure breaks, you have to be bullish. If the structure breaks, then you got 1750, and then you got 17 flat. And then after that, you're going to see some unwinding in your dollar. I would like to get long on a nice pullback to 115 and 114.15. That'd be those would be some really good swing trades. Yeah, that'd be some really good swing trades. So that's what I'm seeing on that. Interest, Yanni's saying interest of depths. Do you mean deposits? Departments? I'm not sure what you mean, Yanni. I need some help. Tom Saramine. What do you think about tick charts? Do you find them useful for day trading? I don't trade tick charts. So I don't really have any thoughts on them. I haven't used them really enough to give them any sort of weight or value. So yeah, it's not really much for me to comment on. But I don't use them. The number of times I'm getting stopped out due to type loss has been reducing quite a lot in the last few months, and I was wondering if very clean levels like this can allow me to increase my R. Sure. The cleaner the level, the more supportive the context, obviously the little bit more order flow support you have. So yeah. Apple 2 trillion doesn't make sense on a normal day also. Yeah. There was some weird, so just 2 days ago, this was the other thing about it. There was kind of there was like some institutional traders that were passing around some pretty interesting option trade ideas on Apple. So just this Wednesday, you could have bought a back ratio spread. So a back ratio spread in options is where you buy different amounts on the same expiration date on the same instrument. So for like Apple, you could have bought the 250 call, 250 when Apple was right at its highs. So when Apple was like right here, this whole time period when Apple was 127 to 133, the 200 call, you could have bought that one for like $3.50, but you could have sold the 250 calls in a back ratio style, which means that you buy one call at 200, you sell 2, 3, 4, whatever calls of the 250, and you would have had a full credit. You would have had like a $2 or $3 credit on that, which is insane. Because for Apple to get to that, then that was the December expiry. So for Apple to even get to that price, Apple would have had to gone from 2 trillion to 5 trillion in market cap by the end of December. That's not going to happen, in my opinion. So it was like this free money trade that like they were passing around, and I was like, holy shit, you know, and I started looking at the option chain and I was like, oh my God, like it was like a free money trade. It was just a total free money trade. Like the chances of Apple going from like literally 130 to, it would have had to gone to like $257 for me to break even. And so on the trade, basically. And so it would have had to double and gone to 5 trillion market cap. That's just not going to happen. It's just, especially after this kind of run, it was just so insane. So, you know, there was some really, really good, like when the markets get that distorted, because you're talking 250 is the farthest call you could buy on the wings. The wings is like the end of the option chain. There are no more calls being offered past 250. So when the farthest call on the wing you could possibly get is selling for that high a premium, that tells you that the option market is like totally like distorted and mispricing everything. And when there's mispricing is when there are amazing opportunities. So there was this free money, like, you know, 1/4 back ratio trade on Apple. It was just an awesome trade. It was just like, especially after this sell off, like I could just take the money now and be done with it. You know, I could just, you know, close it all, like, because I've received so much credit on it, you know. It's just insane. It's just absolutely insane. Like my Tesla put, I sold my Tesla put when Tesla was like 500 or something. I sold the 193. What did I sell it for? 237. 237, a 193 put, which means that Tesla would have to drop like 60% in value to even get to my put. And even then, the credit I have on that, like it would have to get to like 190 for me to break even. So like 189 is where I start losing money. But then it just gets converted to a stock position. The guy exercises it, whoever you know, they're going to exercise it by that time. So I received a credit and then I'm long Tesla way down here. Like, you know, 193. Like this was a no-brainer trade. And that is way out on the wings. So it's just, there was just some stupid pricing going on in the options market. It just stupid pricing. Khan Nguyen saying, what are your thoughts on Bitcoin? So Khan, if this is your first time, welcome. The way we do call outs like this is that if you want me to analyze a currency pair, a stock, whatever, something like that, instrument, time frame, if you're long or short, share those details. Otherwise, one sentence description on the price action context. So do that, and I'll do an analysis on it. Katie said, great. Just wanted to see if I was thinking like you, as I pretty much was. Cool. Pavan saying, wow, that's a huge premium for December. That's huge. Exactly. It's a huge premium. December. And my Tesla put is the October expiry. So what is that? That's the October expiry is the 16th. The 16th. So you're talking 1, 2, 3, 4, 5, 6, 7, 8 weeks. No, that can't be right. Is that right? 1 week, 2 week, 3 week, 4 week, 5 weeks. Oh, okay, that's not right. 6 weeks. So Tesla would have to get to like $190 in 6 weeks for me to be losing money. Otherwise, I collect a massive premium on it. I mean, it's just stupid premiums. And then for Apple to have a December premium on their farthest wing, it's just insane. It's just insane. So sellers will make a ton on those contracts now. Yeah, we already are making a ton on it. I'm making a ton. I'm making a ton on my QQQ. You know, I mean, this is just golden. So the QQQ, I'm making a ton of money on that. I'm going to make great premium on the Tesla thing. It could sell off a lot because there's a lot of people that are levered long on Tesla. Like there are a lot of retail traders that bought Tesla with maybe $1,000 or $2,000 account. They bought it at 500, maybe even bought it at 530. And now it's at 384. So even per share, they're down $130 on their $1,000, $2,000 account. That's, they're down like 10% in like 2 days. So how much pain of that can they really take before they're like, okay, I got to get out, and that's assuming that they only have like Tesla trades on their books. If they have other trades, they don't have room for these kind of losses. So yeah, selling premium this week was like golden. That's why, what was it, Monday and Tuesday and Wednesday, I was pretty aggressive in stock trades, but I was slipping in some option trades here and there because I was like, this premium is just way too good to not take. And then Thursday came and I was like, yeah, let's get a lot of premium right now while we can, because this is the last of it. And lo and behold, yeah, it changed drastically. Katie, what's your advice to people that trade Forex looking to get into trading stocks? If you already have some decent price action skills, then you're going to find the transition into stocks easier, because in Forex, you don't have access to flow data. Flow data is volume, actual volume, and VWAP. VWAP is volume weighted average price. So the volume, the number of shares being traded at that price at that time. So it's kind of like an expression of order flow at that time. You don't have that in Forex. So if you have really good price action skills that you've built up from trading Forex, they're going to transfer over really well to stocks. It's almost like it makes, when I went from FX to stocks, it almost like it made it easier for me to trade technically, because I had these other tools that gave me a whole new set of information that I did not have before. And so, my suggestion is I would start with, we have actually a lot of videos on this. In fact, we might even have an entire playlist, how to trade stocks. So watch this playlist and all these videos inside and out. Here's the playlist. It's how to trade stocks. There's a lot of videos in there, probably good 10 plus videos. And so we talk about how to understand VWAP, how to read volume, how to trade price action, how to, use your scanners, things like that. So that would be my suggestion. Go through that whole watch list, watch all those videos, how to day trade stocks. So go through all those videos, and you're going to really learn a lot really fast. And then when you're ready, check us out on the stock trading course. Khan Nguyen. Okay, so Bitcoin daily chart. It's my first time here. Apologies. All good, Khan. It's good to have you here. So welcome aboard. Okay, so daily chart. Let's go Coinbase. And let's switch to, okay. Short term, I'm bearish on Bitcoin, but medium term, I'm bullish. I feel like it's building a good base. This parabolic run was insane. That was absolutely insane. And it ended like all parabolic runs do. I could show you parabolic runs over the last 100 years, and they all pretty much look like this. And so it's taken a few years to build a base, but I feel like, build this low. This is a good base here. It built a higher low, so it's building a good base. So for me, I think there's probably, like, if you're a medium term investor in Bitcoin or something like that, I think around this 9,200 to 90, kind of 60, 90, 70 zone. I think this is a pretty good zone here. And then my next base for buying Bitcoin would probably be around 7,250, 7,300. So if you're a medium long-term player in Bitcoin, I have no problem. I would probably put in some money at around 9,100, and then I'll add more at about 7,200. I think eventually it's going to, as long as this kind of base here holds, then I think it's going to continue to retest these highs. So I think we could easily see 13 again. And, over time, I think it'll build a base, but it needs to build a base. Anytime you have a massive parabolic round like this, you need to build a base. I personally would be long Bitcoin through the end of the year, through the election, because I think there's going to be a lot of volatility with that. And so, yeah, I would be long Bitcoin probably through the end of the year. And then after that, I have a feeling around January, obviously depending upon how the election goes, but I have a feeling around January, things are going to stabilize a little bit. I think by then we'll have a vaccine or a pseudo vaccine in place. Like the Lancet just published a study on the vaccine that was produced out of Russia, and they said it performed really well in phase 1 and phase 2 trials. They still got to do more testing, but it's very, very favorable for them, and it passed all their tests. And the Lancet is one of the big three in terms of medical journals. You have Lancet, American Medical Association, and the New England Journal of Medicine. Those are the big three. And so to get that kind of publication from Lancet and kind of approved from Lancet, that's like a game changer. So, a lot of the Western skepticism around the Russian vaccine was all BS. It was mostly just political posturing because, of course, the US or any country wants to be the first to develop the vaccine because that's billions and billions of dollars in profits for them. And it also makes them look like the heroes. And so, Trump's trying to get reelected. Of course, he'd want to be, the first one to come out with a vaccine. Didn't happen. Russia did it. And it seems like it's a good vaccine. So I think by the time, they're going to start distributing late October. I think by the time it gets out and cases start to calm down, November, December, January, I think that's when we're going to start to see some calm in the world. But I think between now and then, we're just going to see a lot of volatility. And as long as there is that kind of risk and volatility, Bitcoin is going to be something that's valued. So that's my thoughts on that. Tom Sermon was saying Tesla even was at 555, I think. Yeah, I wouldn't be surprised. What was the high on it? Yeah, I got 539 as my high. That's insane. It's absolutely insane. And in 3 days, it entered a bear market. Actually, 2, because you went from 538 to 388. It's $150. So what is that? 15 divided by 538. Yeah, you're down 27%. You've now entered a bear market. That's really bad. Wow, S&P's down 100 points. This is gangbusters. This is honestly, it's awesome because there were a lot of stocks that were super expensive. Now they're gonna be cheap. My option plays are crushing it right now. And some of those prices were ridiculous on Tesla. Like Tesla had no business being that expensive. Absolutely no business. It was a bubble. It was just totally a bubble. There's no way you can argue differently. Okay. Antonescu, Adrian. Antonescu, are you Romanian? Just curious, because anytime I see those types of names like Antonescu, ESCU or something like that, yeah, I have some Romanian friends. We used to have somebody who worked from us who was Romanian, really good guy named Gabriel. And he had a similar spelling like that. So every time I see those names, I tend to think Romanian. Hey, Chris, as an intraday trader, I prefer 2 and 5 minute charts. I'm more into the 5 minute, but I'd like to know what is the whole concept behind any suggestions, any tips? What do you mean by what is the whole concept behind? Can you help me out with that? I'm not sure. What's the whole concept behind what? The 5 minute chart, day trading, help me out. So if you could elaborate on that, great. That would be helpful. Tom Sermon, you are the only trader I follow. Great content. I appreciate that, Tom. Thank you. That's good to hear. So let me know about that, Antonescu. Okay, so you are Romanian. Okay, cool. It's cool. I'm learning names pretty well. I'm still working on some of the Middle Eastern names, but I feel like I'm doing better at getting to understanding where they are. Kevin Kari, hello to you. Hello. Sahan Tehrani. I know it is random, but what are your thoughts on all the fiat currencies going back to zero? Okay, let me answer your second question first. If you had an option between buying solid gold or real estate, which one would you choose? I would choose real estate. I would choose real estate. So historically, over the last 4 or 5,000 years, real estate has made more wealth than gold. The other thing about real estate is that so gold's a commodity. Real estate, I don't know if you call it a commodity. You own the land, so you can build on it. You can extract resources from it. You can grow like food on it. To me, that is a game changer. Like if you said, "Hey, Chris, with $10 million, what would you choose to buy? If you could only buy one of these, would you buy gold or real estate?" I'd buy real estate. Because if I own the land, there's a lot that I can do on that land that I can't do with gold. Like I have to use gold to buy land. I have to use gold to buy food. But if I own the land, I don't have to pay for it, and I can grow food on that. You can't do that with gold. So gold, you have to use it to buy something. So I would choose real estate. Real estate's generally made more, accumulated more wealth over thousands of years than gold. Um, yeah, I mean, right now I live on 35 acres. I have 35 acres of land, and what I can do on that. Like we have so many trees on our land that 35 acres, we could probably sell $1 million worth of trees and still have a lot of trees left over. That's a massive amount of equity value just in the land itself. Like we bought the place for like 165, so it's probably worth about 185 now. But yeah, I mean, you can sell lumber. You can sell lumber. And so you can sell huge chunks. We have huge trees that have been there for a long time, and some of them that were logged, and we log again. But just in the trees alone, we could sell $1 million worth of trees and still have thousands of trees left. So I would lean towards that. In terms of all fiat currencies going back to zero, that just seems like a very improbable scenario, because think about what that would do to like the global economy. Like what would governments do at that point? What could they do? You have a currency for your country that's worth nothing. So the chances of all currencies going to zero at the same time, it's never happened in history. Like it's never happened. And governments probably wouldn't even allow that to happen. Like they would step in or create a new currency or something like that, because if their currency is worth zero, then there's no commerce. It would just be completely dead. So it seems like a highly improbable scenario for all of them. You might have some that become worthless at a time here and there, but I think if that was to start to happen, like if the Zimbabwean currency, which is worth virtually nothing right now, not a whole lot of people care. Like people in Zimbabwe care and the governments care, but like the US isn't thinking anything about it. But like if the euro was all of a sudden to go to like 20 cents, the European government would, the EU government would step in and do something about it. So there's just too much on the line. If the currency goes to nothing, there's too much on the line for the political representatives, the leaders of that government or EU or whatever, to allow that to happen. So they'd have to make some sort of drastic changes to recalibrate things and change things. So yeah, seems like a low probability scenario. Antonescu says, why do professional traders prefer 5 and 2 minute? I don't know. I don't speak for all professional traders. I like the 5 minute. I think the 5 minute does a really good job. The 2 minute doesn't really make a whole lot of sense to me, because it's not like a natural increment that people think in, like people think in 1 minute increments, people think in 5 minute increments, half hour kind of thing, but nobody really thinks in a 2 minute increment. So I don't really trade 2 minutes. I know some scalpers do, but it's not like the 2 minute has some inherent value that every single like day trader uses. Like day traders use all kinds of time frames. They use whatever they use. I use the 5 minute, 1 minute. There was a time period I was using the 3 minute, but I don't really use that anymore. So I just use the 5 minute, 1 minute for my day trading. So yeah. Sahan Terran saying, sorry for the random question. I'm 14, but really interested in the market. Not totally fine. That's a good question. So it's worth asking. And welcome. It's nice to have people of all ages here. I would love to be learning about the markets when I was in high school. They just weren't teaching that. They were teaching like boring econ classes. So, whether you become a trader or not in your profession, in your life, Sahand, is totally up to you. And I trust you to make those decisions, whether you want to or not. But there are things that you will learn by becoming a trader that can benefit you for the rest of your life. So, kind of like if you were to become, like, let's say you did martial arts for like 3 years. Well, and then you just stopped doing martial arts. Would it have been a complete waste of time? No, because you have learned a lot of things in there that could be highly valuable. Like I've known people that practiced martial arts for several years, but then they just stopped. However, like in a self-defense situation, they were way better off than the average Joe because they went back to their training. They adjusted posture stances. They like were able to handle themselves. They had learned skills that last them the rest of their life. And so there are things that you will engage in throughout your life. Some of the things you will do for the rest of your life, some of the things you'll just do for short periods of time. Whether trading is one of the things you do for a short period of time or you do it for the rest of your life, there are things that you will learn, skills, mindset things you learn as a trader that if you learn them well, they can benefit you for the rest of your life. So definitely dig into it. Con says, I've been trading for a while and I still make the same mistakes all over and over again because I don't journal any of my trades. I think if you're making the same mistakes over and over, journaling is not the only thing that's going to stop them. Like journaling is necessary, but not sufficient. If journaling was the only thing you needed to go from losing money to making the same mistakes to not making them, there'd be a lot more traders that are profitable. Journaling is necessary, but not sufficient. So it's a good thing, but it's not going to change everything. Do you recommend to journal trade? Do you recommend a journal? I recommend journaling 100%. I use TradeView. So TraderView, TREDERVUE. Yeah, TraderView. This is what I use. I should probably get like I'm giving them like free promotion. I like it because they give us certain analytics that I don't think Edgewonk does. So, and in Edgewonk, you have to manually input it. I think that's awful. It's just that shouldn't be. So, yeah. But definitely you got to journal because that's the analytics skill for trading. You have 4 skills that you need to master, 4 trees of skills that you need to master as a trader. And that's your buying and selling skills, and that could be your buying and selling skills. How do you buy and sell? How do you make trading decisions? And that could be technical, fundamental, sentiment, or flow-based, or any combination of that. So that's the first skill. The second skill you need is risk management skills. That's number 2. Third skill you need is mindset skills. And then the fourth skill tree you need is analytical skills. You have to be able to analyze your performance, your numbers, find the leaks in that, and then make the adjustments so that you don't continue to execute things that are going to cause you to lose money. And journaling is a part of that analytical skill tree. So yeah. Kevin Cave, can you please shine a little light on pivot points? I don't trade pivot points, so there's nothing for me to really say about it. I don't trade them. I don't teach things that I don't personally use. It's not that I don't know about pivot points. I used to be a pretty big pivot point trader from like 08 to 010. I was trading pivot points pretty hardcore, but I ended up getting rid of them because I felt like they were passive skills and I prefer active skills. So passive skills would be like pivot points, Fibonacci, like you put them up and then you're waiting for the market to get there, but you don't build the skills of what happens in between those levels. So it's a passive skill because you're just waiting for the market to get to, and when it's not at those pivots, you don't really do anything. That's a passive skill. I prefer active skills. And so it's not that I don't know anything about pivot points. I understand them really well. I feel like I understand pivots or fibs pretty well, but I don't teach things that I don't personally use. I see YouTube channels where like the guys like teaching, like, here's how you use the RS sign. Here's how you use the MACD. And here's how you use this stochastic. Here's how you do this indicator and this indicator. And here's how you master this. And here's the secrets on this and the secrets, right? Somehow they know the secrets like on 20 indicators. And yet when they trade, they don't use all 20 indicators. They use like maybe 2. To me, that's just fucking BS. Like you are selling information, like just trying to get people in, but you don't actually use it on a regular basis. To me, that's like BS. Your job as a teacher is not to teach the things that you don't use just so you can get a wider audience. That's like clickbait. Your job as a teacher is to teach the things that you use really well, that you can use really well, and that you can effectively teach. If you don't use it, you can't effectively teach it. So you can't teach it because you don't have the continual experience and skills around that. And so I know pivot points and I could teach them on a technical level, but I don't use them every single day. So I'm going to give you less information than someone that's using them every single day. And so instead of engaging in this clickbait bullshit thing that you're going to see on YouTube, where like traders will talk about like 100 indicators and somehow they know the secrets to all of them, it's just complete BS. Teach the things that you use day in, day out. Don't teach the things that you don't use. If you have to clickbait to get attention, then you're to me, you're more of a peddler, a YouTube peddler. You're not a trader. So I only teach things that I use, and I don't use pivot points on a regular basis. I haven't in 9 years. So yeah, there's nothing for me to really say about it. Kind of green. One last question. I checked Bitcoin futures. Since July 19, we have around 15 gaps and 14 already filled. What is your thought on gaps? Most gaps fill, but at what cost? You can be like, oh, this gap's going to fill, but the R to R ratio is just completely off. So it doesn't really make much sense, So yeah, they fill, but at what cost and how long? Nobody knows. So instead of waiting passively for gaps to fill, trade what you have in the markets right now. KD, random question. What are your weekends like, Chris? I rub myself in peanut butter with my hamsters. No, of course not. What are my weekends like? I work my ass off on the weekends. Saturdays, I come into the office. And so Saturdays, the weekends, I do a lot of work on the land because when you have 35 acres, you have a lot of work to do on the land. I try and relax a little bit on the weekends. I read a lot on the weekends. So I usually read for about 4 hours a day on Saturdays and Sundays. I usually only get to read for about an hour a day, Monday through Friday. So the weekends is when I get to like do some heavy reading. My girlfriend wakes up later than I do. I usually wake up at like 6:30 on the weekends. Monday through Friday, I wake up at 5. Weekends, I usually wake up around 6:30. And so I usually read from like 6 to 10. And then I usually have breakfast, do thing on the land. I exercise. I try and go have fun. I like to go on hikes, camping, go out on the lakes, kayaking and things like that. I like to spend my time in nature, spend my time with my girlfriend. I do come in the office usually on Saturdays for a few hours if I can. So sometimes I'll read and then go into the office, but I usually like to come in the office for about 3-4 hours. Sometimes I have work to do for the business. Sometimes I have to do stuff like trading analysis, like kind of go through my journal and, analyze the data. Yeah, that's what my weekends are like. So hopefully answer your question. Peter Leroux, my first day attempting day trading. I have no idea what I'm doing. Okay, well, that's an honest start. That's totally an honest start. I appreciate your honesty. So let me ask you this, Peter. If you were to try and learn how to do martial arts on your own and you had no idea what you're doing, what would be your natural course of action from there? I know there's like a 10-15 second delay, so I always have to calibrate that in. So what would be your natural course of action? I'm saying this because trading, whether it's day trading, swing trading, whatever, trading is a skill. So think of it like learning a language or learning to play an instrument or learning a martial arts, or there's even aspects, or learning a sport. There's even aspects of trading that is very much like working out. I didn't do a whole lot of exercise for a few years, just mild amounts of exercise. Like I would go on walks with my dog. And so that would be my exercise, but I never really did any exercise. And then Sasha, who's like a workout maniac, he kind of convinced me to get back into it. And I wanted to start building up my cardio again, because when you sit at a computer for hours on day, it is horrible for your body, for your posture, for your organs, for your stomach, for your cardio. It's just bad for a lot of things. So I said, okay, I'm just going to commit to start doing cardio every single day. And so I started doing cardio. And, there's certain things about like working out that you get it to, like you first go through the pain phase, which is like, it's just hard in the beginning. Your body's sore. It's not used to working that hard. The nervous system and the muscles are not used to being like stressed that much. So there's like this pain phase, but you got to keep doing it. And then you get past that, but it's not quite a fully solidified habit. So there's less pain and there's less intensity, and you start to feel some of the benefits from it. And you're able to go longer and longer on the machines in your cardio routine. But there's still certain days like you're about to jump on that cardio machine. You're like, man, I feel like shit today. But, and some days you give in to that. Some days you're like, fuck it. I'm just going to not work out today. And other days you hear that voice, but then you're like, hey, I need to do this whether I feel good or not, because I know that it'll be good for me and the benefits will outweigh what I'm feeling right now. And so you fight through that resistance. And so, and then eventually you get to the phase where it just becomes like 100% habit, to where you're like, yeah, I hear that voice, but I don't care. Like, I'm going to do this. Trading is kind of like that. You do have to go through mindset stages, but it's a skill. So jump in and get beat up and learn from my mistakes. Yeah, that's kind of a rough way to learn martial arts, isn't it? Like, that seems like a very rough, like if I'm going to learn how to be a mixed martial artist, like it would probably be a really bad idea to just jump into the UFC right now and fight these dudes who are like killers, who like, they've been training in this for like decades. They know like every in and out of it. Like that seems like a bad idea to learn martial arts. So let's try this again. If you wanted to learn how to be a mixed martial artist, what would be a better way to do that other than jumping in and getting beat up? So let me know about that. And as you're answering that, let me answer a few questions along the way. Con says, talking about sleep, how many hours of average sleep do you get? I try and get 7 to 8. Sleep is super important. If you don't get proper sleep, you will not learn well. It's like, if you want to disrupt the learning process, just get really bad sleep and you will have a really, really bad learning process. Like, you will learn very poorly. Your brain needs time to integrate the information that you learn. You need rest periods. And so sleep is one of the best ways to do that. Hi, Chris. Any comments on the 90% book, the 90% mental book? Yeah, I did a whole video on it. Watch the video. So getting back to sleep, make sleep a priority. If you really want to be good at anything, make sleep a priority. Make it a priority. Professional athletes, make sleep a priority. Treat it the same way. Kevin Covey says, pivot points you say will be a passive trading skills. What will be some of the active trading skills? Price action. Price action is an active trading skill. Sasha's saying pain leads to growth. Most of the time, pain leads to growth. Sometimes pain doesn't lead to growth. Like if you're doing yoga, and you're stretching to the point where it's painful, pain will not lead to growth, actually. So, but when it comes to working out, pain does lead to growth. And in trading, there are certain aspects. There's certain aspects of pain when it comes to trading that lead to growth, and there are some parts of it that don't. Some of it's just like needless beating yourself up. What are books you suggest? 90% Mental. We'll be doing another video in like a week or two on another book review. So we're trying to do one every month. Yeah. Peter says, so actually there you go. So actually taking classes, learning the basics, getting a good trader, consistently learning. There you go. So you have to create a structured learning environment. So if you want to be a mixed martial artist, getting into the ring without any practice, training skills, footwork, body posture, how to throw a punch, you're just going to get beat up and it's going to be very painful. That seems like a bad idea. That seems like a really bad idea. Like if you're a masochist, it seems like a good idea. But if you're not a masochist, it seems like a bad idea. So now we're talking about it. You got to get into a framework and structure learning environment. And the framework is built that way for a reason. So like when I build the structure of a house, the framework is relatively the same for most houses. There's a reason for that, because that type of framework supports the ability to build up. The same thing is with training. It helps to learn from a structured framework that is built for a reason, that creates growth and allows you to grow through your levels. And so you build a foundation, and then you can build on top of that foundation, and so forth and so forth. That's how you have to do it. So you have to take classes, you have to learn the basics, you have to learn the key skills. You have to learn the key skills of trading. We've talked about the 4 skill trees. So the 4 skill trees for trading are whatever it is your buying and selling decision. And that can be based on technical, fundamental, macro, or technical, fundamental, sentiment, or flow based. Second skill tree is your risk management, risk and mind management. Third skill tree is your mindset skills. Fourth skill tree is your analytical skills. Those are the 4 skill trees of trading you have to learn. And inside each skill tree, just like those video games you play where you like build all these skills until you get to the pinnacle of that skill tree, you have to build a lot of sub skills within each skill tree. So that's your job. So approach trading, day trading as a skill set, and find someone who offers a framework on how to learn day trading that resonates with you. Their communication style resonates with you. Their framework for teaching resonates with you. They have a structured way of learning that resonates with you. Find that and then dive in head first. And that's where you really go at it. Yeah. Arul C says, thank you. Jeremy Deuce says, I have to say, there isn't one day that I do not thank God for bringing Second Skies Month. I appreciate that, Jeremy. Thank you. It's good to have you as a member. You're just a great member of the community. Okay, so how are we doing on time? Okay, 1 hour. I can handle a few more questions, and then I'm probably gonna wrap it up. We got a holiday weekend here in the U.S. So Monday, U.S. markets are closed. So after Europe, you can just shut off trading for the day, because it's gonna be nothing going on in the U.S. session. It's kind of why it's important how the markets close right now, because how they close right now is going to have a big impact on market open. Super huge. Just a heads up, we are doing an options boot camp on September 12th. Do I have so if you want to learn about options, if you want to learn how to like make a second income on your trades, so you're long a currency pair or a stock or something like that, and you want to get a second income, if you want to learn how to hedge your positions, which is really another way of asking, hey, I'm in a medium or long-term position. I still like the position. I still want to be long this pair, this stock, or this index or whatever, but short-term it's a pullback. What can I do to neutralize some of the risk? So that when somebody says I want to hedge, that's what they're saying. How can I neutralize some of the risk? If you want to learn how to make money when the market's going absolutely nowhere, so if any of those things are interesting to you, then you're going to want to learn how to do options. If there are 2 pieces of advice, 2 or 3 pieces of advice I could give my earlier trading self 20 years ago. If I could tell myself 3 things, one of them would be work on your mindset until you're fearless in trading. So that would be number 1. Number 2 would be to get training and learn the skills of trading very early on. Forget about the money. I was too focused on the money, and it was great, but it also hampered my learning curve because I was not focused on building skills. And then number 3 would be learn stocks and options early on. I think if I could take any trader from zero and mold them into any way I want, I would teach them in terms of asset classes. I would teach them FX, stocks and options. And yeah, I would teach them that. I would teach them at least 2 of those asset classes. And so, but I would definitely recommend learning options, because it changes the way it's like going from 2-dimensional chess to 3-dimensional chess. Trading FX and stocks is pretty straightforward. Like if you buy it, you need it to go up. If you sell it, you need to go down. It's very straightforward. Options changes how things make money. You can make money based upon time. You can make money based upon volatility. You can make money based upon direction. You can make money based on no direction. On top of it, if I go long or short the NASDAQ right now, like let's say I go short the NASDAQ right now. Okay, well, for me to make money, the NASDAQ has to go short. It has to lose value. It has to go down from where I get in. If it goes nowhere, I make no money, none whatsoever. With options, that doesn't have to be the case. You are not just a directional trader. You're also trading time, you're trading volatility, you're trading a lot of things going on. And so you can make money in multiple ways. You can make money by buying the fire insurance 2 weeks before an actual fire sets off. And if you do that, you make a lot of money because fire insurance is really cheap when there's no fires. As soon as there's fires around, fire insurance is very expensive. Trading is very much the same way. So it's not just, hey, market's got to go up or market's got to go down for me to make money. It's all of those things together. And so now you can make money if the market goes nowhere. Now you can make money if the market doesn't get to a certain place by a certain time, but it does weeks after or something like that. You can make money if all of a sudden just the volatility increases on that particular stock or FX pair index. Like options is a game changer. It'll totally change the way you think about trading and how you make money. And one of the great things about it, when I make a trade, I need that trade to go in my favor to make money. But there are option trades you make that you can get paid the moment you make the trade. You get a credit for making that trade. It's called writing options or selling options. So they give you the money, and then you can use that money to fund other trades or to protect positions. Like they give you the credit right off the bat. That's a game changer. So if you want to learn how to do that, we're doing a boot camp on the 12th, 2-hour webinars where I'm going to teach you 6 option strategies to generate income. Then you get a follow-up webinar 1 week later. You get a follow-up webinar 1 month later. And it's going to totally, 4D trading. It is kind of like going from 2D chess to 3D chess. It totally changes everything. So, well, I got a lot of questions in here. Are those binary options? No, we're not trading binary options. We're trading options. It's different. Binary options is very, very different. It's not on binary options. What order would you recommend taking your courses in? I'd probably start with price action first because it teaches you the most core set of skills, learning to read price action context and order flow in real time. It's a core skill. That's your buying and selling decision skill. I would probably start with that. Then I would go to either the ATM course or the STC course. If you were super gangster, like if you were like hardcore, like really hardcore and like, dude, I want to learn this like in an Olympic level type way, then I would actually start with the mindset course, because if you get the right mindset from day one, then your foundation, your mindset foundation is like rock solid. And so that's kind of like the first thing I said I would tell myself 20 years ago would be work on your mindset till you're fearless. Like build your mindset, your trading mindset till you're fearless, because I'm pretty hardcore about this. And so that's like the most like gangster way to do it, which is that you build this super sharp mindset. It's kind of like William Wallace and Braveheart, where like his dad dies, his uncle like says, "Hey, I'm going to care for you." And he picks up the sword and he's like thinking about, "Hey, I want to use the sword." And he's like, "Oh, you want to learn how to use the sword? First, learn how to use this, and then I'll teach you how to use the sword." That's like the most gangster way to do it. Learn how to use this, then learn to use the sword of trading. So that would be like the gangster way to do it. Otherwise, just start with the price action course, then do the stock trading course, then do the mindset course. That would be my recommendation. Phoebe, good to hear from you. Thanks, Chris. That you put PA risk management mindset as whole and teach us how to build the skill around it. I appreciate that. Yes. I try and teach in a very holistic way. I try and teach all 4 of those skills. Okay. How often do I do this webinar? This webinar that we're doing right now, first Friday of every month, I do it. Sal Mutana, is the market really going up or is it set up for a downtrend? It's pretty strong reversal. It depends on how it closes. Depends on how it closes will have a big effect upon how much weight it puts onto it. But that's a very nasty candle. This is a very nasty candle, and it's got a lot of selling pressure involved in it. There's definitely some buying off the lows in the NASDAQ. I mean, that's 11,146. That's 300 points off the lows. But I mean, this from the highs, the thing was 11.8. So it's 400 points off the highs and 300 off the lows. So clearly some dip buyers, probably some long-term players coming in, some dealers coming in and things like that. Depends on how it closes will determine what is the more likely direction. That's why you got to learn to trade price action context in real time, because you'll know to see, hey, is this setting up for a big move or not? All right. Okay. That's pretty much it. I feel like I want to wrap it up. We've done a whole hour here, and we've covered student questions, and we covered a lot of member or non-member questions. So I feel like this was a pretty good session. So I hope you guys join us for the options bootcamp. This was an awesome session today. I feel like we covered some good charts going on in the market, some of the trades that I took recently. We covered some really good member questions. I think we went over some good mindset stuff, some good skills stuff, how you can really learn at this. I know Peter had the question. Peter Leroux, you had the question about like, how do you get involved? So hopefully I gave you like a good roadmap for how to do it going forward. But to break it down shortly, Peter, you got to learn the skills. You got to learn the 4 skills to day trade successfully. If you want to have a crazy time day trading, then just learn it very haphazardly. You're going to have wild swings across the market, and eventually that will end up with you losing money. You may win money in the short term, but eventually it's going to end up with you losing money. I've seen it thousands and thousands of times. Nobody's ever learned the professional skill trading in a haphazard way and become a professional at it and like made money long term. Kind of like if you learn martial arts in a really bad way, you're going to have pretty poor skills in a fight. If you learn, football in a very poor way, you're not going to be that great on the pitch. So you need to kind of treat this. It depends on how you want to treat it. If you just want to explore it, then work on those 4 skills. Try and find some introductory material. We have on the playlist, this playlist right here is a very introductory like group of videos that you could use to help kind of give you more information about day trading. But you're in this learning phase, so you need to learn as much information as you can. You need to build your skills as much as you can, and the sooner you do that in a framework, the better the better it is for you. The longer you wait, the more haphazard your learning process is going to be. So hopefully that helps give you some framework for how to move forward. So Brandon saying, as always, great webinar. Thank you so much. You're welcome. And Katie, thank you, Chris. You're welcome as well. It's good to do these with you guys. So have a great holiday weekend. I hope to see you guys in the options bootcamp on the 12th. Member webinar. We'll have a member webinar next Friday. That's private member webinar. This Tuesday, I'm going to be doing like a 30-minute, 45-minute introduction to covered calls and options. So I'll be talking about some basics in covered calls, how you can use covered calls to generate income on your current positions. So we'll talk about that. Join me this Tuesday, 6 a.m. Pacific Standard Time, 9 a.m. Eastern. So other than that, have a great weekend. For those in the U.S., have a great holiday. Enjoy your Monday off. Take care, everyone, and I will see you guys next time.